Very good morning, everyone. Good morning, everyone.
Good morning, sir.
How are you all? Bata. Any doubt of last class? Any type of doubt? If you have done revision, any doubt in your mind, you can ask me. Bolo. Acha. Yesterday, the last topic we have done, changes in provision. Changes in provision? You remember? So what I have said, key provisions should be reviewed, means reassessed at the end of each reporting date. When I say reporting date, it means balance sheet date only. Reporting date means balance sheet date. So IND AS has used reporting date, not balance sheet date. So we'll use this word only, reporting date. Okay? And it should be adjusted to reflect current best estimate. What does it mean? Means this is the first year when there was what? Some contingencies. Now, these contingencies might be what? Either provision or contingent liability depending upon present obligation or possible obligation. Okay? Suppose in the first year you have identified these contingencies as what? Contingent liability. It can be a situation. So you have disclosed contingent liability as per current best estimate. As per current best estimate. Now we have understood how to measure what? The amount of provision and contingent liability. It should be the best estimate. Whenever there is a large population, single population, you have understood. Correct? Suppose our estimate was 1 lakh. 1 lakh. Okay? So, bata, what journal entry you have done? No journal entry. No accounting treatment. No accounting treatment. Only disclosure. Then in second year, can I say, if still the contingency is there, means the future event has not occurred. It means future event has not occurred. So once again there is a contingencies existing on a reporting date. So once again we need to what? Identify whether it is provision or contingent liability. Depending upon obligation, means last year possible obligation may become what? Present obligation. Bolo yes or no? Last year possible obligation may become present obligation. So it might happen in the second year you have identified it as what? Provision, and all the three conditions have been satisfied. So once again you need to measure it, and as per current best estimate, let us assume the provision amount was 2 lakh. It can be a possible situation. Bolo yes or no? So you have passed one journal entry, PL account debit to respective provision. PL account debit to respective provision. Then once again year 3, if the future event has not occurred, so once again you need to reassess. Once again you need to find out whether it is a present obligation or possible obligation. Means it might happen last year provision might become contingent liability, or last year contingent liability might become provision depending upon the evidence available on current reporting date. Current reporting date. It means we need to adjust the amount as per current best estimate. Are you able to understand? So that point I have given. I think you have understood this point. Correct? Then I have given you the journal entries also, that if the provision is related to an expense, the journal entry is PL account debit to respective provision. But it might happen the provision is related to some asset, means it is directly attributable to the construction, acquisition or production of an asset. So any directly attributable expenses should be added to the cost price of the asset. Added to the cost price of the asset. Therefore, I have given the journal entry asset account debit to what? Provision, respective provision. Right now, I am not giving any example because there is one best example for this that I will refer where when I will do IND AS 16. So I have deferred that point. Understood? Okay. Then write down one note. Write down one note. When discounting is used, carrying amount. What is the meaning of carrying amount? Carrying amount means book value. You can write down in bracket book value of provision increases every year. Increased amount is treated as borrowing cost. Increased amount is treated as borrowing cost. Can I say whenever we use discounting, so we convert future value into what? Present value? Are you getting? Then automatically when the year will be when the time period will be expired, present value will become what? Future value. You are able to understand? All have done FM, not SFM. I am talking about FM. Correct? FM means financial management. Suppose this is 10 lakh and you have calculated what? Present value. So present value will be less than what? 10 lakh. Suppose let us assume 8 lakh. So this difference is what? Batao. This 2 lakh will be what? Interest element na. So this 2 lakh will be considered as what? Borrowing cost. So can I say whenever we use discounting, the carrying amount will be increases when the time period will be expired. So that increased amount will be considered as borrowing cost. Have you understood? Correct? Let us take one example on this. Example number 25. Example number 25, page number 46, and it is point number 4. Means example number 25, 4, page number 46, and write down expected. Write down expected. What they have given? X Telecom Limited has income tax litigation pending before appellate authorities. Legal advisors' opinion is that X Telecom Limited will lose the case and estimated that liability will be how much? 1 crore. May arise in 2 years. Time value of money is material. Time value of money is material. The liability is recognized on a discounted basis. Thank you very much. The discount rate at which the liability has been discounted is 10%. And it is assumed that discount rate does not change over the period of 2 years. How should X Telecom Limited calculate the amount of borrowing cost? Batao. Solution. What will be the amount of provision? Amount of provision on initial recognition Date is not given, hence I have written initial recognition. We'll assume it is at the beginning of the year. So batao, this will be what? 1 crore into what? Present value factor at 10% for how many years? 2 years. Can you give me the present value factor? 0.8264. Correct. So it is 82 lakh 64,000. Now everyone know present value factor. I am not discussing that. Okay? So we'll multiply with the present value factor and we'll find out the present value. So this is the amount of provision. This is the amount of provision. Means we'll pass the journal entry PL account debit to provision with what amount? 1 crore ki 82 lakh 64,000. 82 lakh 64,000. Correct? Then we'll add plus borrowing cost. Borrowing cost at year end 1. At year end 1. Correct? But at what rate? At 10%, it will be what? 8 lakh 26,400. 8 lakh 26,400. 10% of the amount of provision. So this will come how much? Batao. This will be 90 lakh 90,400. So this will become carrying amount of provision. Carrying amount of provision at year end 1. At year end 1. So this will become carrying amount of provision at year end 1. Simple. So increase from what? 82 lakh to 90 lakh. That difference will be considered as what? Borrowing cost. This point you understood? Correct? Then once again we'll add what? Borrowing cost. Borrowing cost at year end 2 at 10%. But what we'll do, always for last year, we calculate interest as a balancing figure. What was the future value? 1 crore. The difference will be considered as what? Borrowing cost due to some approximation of present value factor. Okay? So what is the carrying amount? Batao. Can we write down carrying amount? Carrying amount of provision at year end 2, that is 1 crore. 1 crore. Difference is what? 9 lakh 9,600. So you can see there is some difference. That difference will be automatically adjusted with balancing figure. That difference will be automatically adjusted with balancing figure. So for last year, always we take interest amount as balancing figure. If you have done higher purchase, you remember, there also for last year, we used to take as balancing figure. You remember? HP chapter, remember, same thing, same technique. So this we have taken as what? Balancing figure. Understood? Understood? Correct? Any doubt? No doubt? Okay. What will be journal entry? Batao. At year 1. The first journal entry is what? Profit and loss account debit to provision for legal damages. Whenever there is some case is pending, we write down legal damages because some compensation might be payable. That is known as legal damages. Are you getting correct? So provision for legal damages, what amount? Batao. It is what? 82 lakh 64,000. Correct? Then, batao. At year 1 end, will pass one journal entry. Journal entry what? Borrowing cost will be expense. Borrowing cost account debit to what? To provision for legal damages. It is 8,26,400. 8,26,400. Correct? Then this borrowing cost will be charged to profit and loss account. This borrowing cost will be charged to profit and loss account. However, for borrowing cost, we apply IND AS 23. IND AS 23. Are you able to understand? IND AS 23 means AS 16. AS 16. Okay, so we'll do there, but in this situation, borrowing cost will be charged to profit and loss account only. However, it can be capitalized if it is for a qualifying asset, if you remember. Qualifying asset, you remember? But in this case, it will be charged to profit and loss account. Okay? Then, year 2 end. 1 second, our journal entry what? Borrowing cost. Borrowing cost, account debit to provision for legal damages. How much? 9,09,600. 9,09,600. Okay? And if you assume that entire amount is paid, there is no difference in payment. So at year 2 end, we'll pay the amount. So at year 2 end, let us assume our estimation was 100% correct, which will not be practically possible. Estimation will be different from actual amount always. But let us assume in this question, so what will be our next journal entry? Provision for legal damages, account debit, 1 crore to what? Bank. To bank, 1 crore. If suppose there is no difference, if difference, that will be adjusted in what? Profit and loss account. Understood? Correct? I think very easy. You understood. Okay? Expected question on this. Why? Because there is difference between AS 29 and IND AS 37. Correct? In as per AS 29, no discounting. But as per IND AS 37, we are doing discounting. Correct? Chalo. Then, what was the point number, last point number I have given? Point number 8. To write down point number 10. Dekho. Use of provision. Use of provision. Dekho. A provision should be used only for the expenditure for which it was originally recognized. This point you understood? Originally recognized means in the last question we have created provision for legal damages of rupees 1 crore. But it might happen, even though we have created 1 crore provision, at year end 2, after year end 2, we might win the case. Now no amount is payable, but we have created a provision for 1 crore. Question arises, can we use this 1 crore for other provision? No, Baba, no. That need to be reversed. Are you getting? Means the amount of provision which was created for original expense, it can be used for only that expense. If that expense is now no more, reverse the provision. You can't use the amount for any other purpose. Understood? In other words, In other words, it cannot be used for any other purpose. For any other purpose. Understood? Correct? Refer example number 26, page number 46. This whatever reference I am giving, you need to refer, okay? Very simple, you can understand. Okay? Then point number 11. Restructuring. Write down expected. Why? Because till now they have not asked any question on this. Restructuring. There are two types of questions which are important in exam. One which they have asked and one which they have not yet asked. Means all questions are important. We can't do any selective study. The question which they have not yet asked, that become very, very important. They will pakka ask, but we don't know which attempt. Are you getting what I am saying? So this is also important. Write down. First, what is the meaning of restructuring? Achha, before that, one doubt I need to clear, because that doubt came after class. I have taken one example that an entity has two business 1, business 2. Are you getting? So I said business 2 we want to discontinue. Whether it will affect going concern of that entity? No, Baba, no. Because this is a part of what? Entity. I said one, suppose A Limited. A Limited has two business. They want to discontinue one business. It is not, going concern is not affected. It does not mean going concern is affected, because A Limited will not be liquidated. A Limited is not going to be liquidated. Are you understood? So any doubt, please ask me after class, because when I give example, and if I will also assume something that you have understood, because that is not a part of this chapter. Are you able to understand? If you have doubt, ask me. I'll clear each and every doubt. And suppose if you are not asking doubt in the class, please ask me up before leaving what? The classroom. Please ask me. Don't keep any doubt in your mind. Don't keep any doubt in your mind. You will not find any teacher like this in India who can entertain you for 2 hours after the class. After the class. Are you able to understand? Each and every doubt should be what? Should be cleared. Are you getting? Because for that reason only you are giving fees. Not for learning. Everything, whatever I am saying, might be written in some reference book also. But the clarification is not written. Clarification is not written. So any doubt is there, only for that reason you have given the fees, na? Bole yes or no? And if that is not completed, it means but there is no future benefit of this fees. So you need to charge that fees to profit and loss account. But you need to capitalize this as what? Intangible asset. Are you able to understand? Correct. Now, coming to restructuring. What is the meaning of restructuring? Restructuring means it is a program. It is what? A program. You know program? Which materially changes the scope of business. The scope of business. Scope of business. Means I will say amalgamation is also a restructuring activity, because that will change the scope of the business. Because you have purchased another business, so it will change your initial business. Are you able to understand? Any program which changes the scope of business will be known as restructuring activity. For example, I have decided to discontinue my CA foundation classes. So that is also what? A restructuring activity. That is also a restructuring activity. So can you say Initially, I used to teach CA Foundation, CA PCC, CA Final. Then I decided to discontinue my CA Foundation batches. I have decided, not yet discontinued. So when I have decided, can you see there will be some cost of restructuring? Are you getting? There will be some cost of restructuring because there are some contractual agreement to teach some student of CA Foundation. It might happen, or discontinuation will incur some expenses. For example, I have done a contract with one academy that I will teach what? CA Foundation, but I left CA Foundation. I need to pay some penalty for that discontinuation. Bolo yes or no? So any restructuring activity might incur some expenditure in future. The question is that whether we should recognize that restructuring cost as a provision, and if yes, when? If yes, when? Are you getting? So we are talking about provision for restructuring cost. Provision for restructuring cost. Are you able to understand? When to recognize? When to recognize? Have you understood? Okay. Look at some examples. Some examples of restructuring. Point number A. Sale of division. I'm not saying sale of entity. If I'm saying sale of entity, then the going concern affected. Then we are not into this point. Then we'll go to what? IND AS 1. IND AS 1 says something about going concern effect. Are you getting? So sale of division. Division, when I say, it is nothing but a business. A company might be doing many business. Sale of a business. Correct. Point number B. Termination. Termination of a division. Termination means closing down. Closing down of a division. Close down, not sale. Terminate. Have you understood? Then, point number C. Closing of a business location or relocating. So if you are doing relocation from one place to another place, this is also what? Changes in the scope of the business. So all these activity, when you have decided, means till now restructuring has not been done. If it is done, then to can I say future event is already occurred. But if you have decided right now, there may be somewhat present obligation or possible obligation for what? That restructuring activity. So should we recognize provision? If yes, when? If yes, when? So can I say in simple word, provision should be recognized when all the three conditions are satisfied. Correct? In simple word, but we need to discuss that point. Write down. A provision for restructuring cost. Restructuring cost is required when recognition criteria of provision is satisfied. Okay? So what are the three recognition criteria? Can you repeat with me? But there must be what? Possible obligation. Oh, sorry, sir. Possible not. Present, na? There is a present obligation from outflow of resources. A reliable estimate can be made. So if these three conditions satisfied, will create what? Provision. Correct? Understood? But in the first condition, present obligation. Can this present obligation can be due to legal obligation or what? Constructive obligation. But this will be legal or constructive? This will be legal or constructive? Constructive obligation. The doubt is what? When we will decide that it is actually a constructive obligation. For example, I have decided to discontinue. my CA foundation. Correct? Whether I should create a provision? No. It might happen if somebody has given a lot of money for CA foundation, I will start teaching. Bole yes or no? If somebody says 1 crore for one batch, I will say no. I will say yes. Even though I have decided, bole yes or no? So when we should create, because it might happen you have decided, but that is not actual plan to discontinue. Actual plan to discontinue. For example, I have decided, but till now I have not announced it publicly. Are you getting? I have decided, but till now, believe me, I have not written anywhere in Facebook. I have not written anywhere in my website that I am not going to teach. I have announced me in the class, but not in every batch. Are you getting what I am saying? Because I am giving examples, so I have said, I have decided to discontinue. But publicly, I have not announced. Can I say, if I announce it publicly, it means there is 95% certainty that I am going to discontinue? Then create provision. Have you understood? So if you have decided, but actual announcement has not been done, are you able to understand? Then there is no constructive obligation. There is no constructive obligation to what IND AS says. Write down. A constructive obligation for restructuring arises when, point number 1, entity has detailed formal plan, formal plan. Are you getting? Means some officially decision has been taken. Formal plan. Are you able to understand? Of restructuring and point number 2, what? Entity has started to implement such plan or announced the main features of restructuring to whom? To those affected by such plan. Means if I announce to student, are you getting? So it means I am actually want to discontinue. So when these 2 conditions satisfied, then only there will be constructive obligation. And then if 3 conditions satisfied, create a provision for what? A restructuring cost. Have you understood? Pakka, one question from this. We'll read this question right now. Example number 30 and 31. Page number 50. Let us read. 30 and 31. And also write down. Refer example number 32. This is a question of ICI book. So this become more important. We'll read example number 32. X Cement Limited has 3 manufacturing units situated in 3 different states of India. Correct? The board of directors of Eximen Limited in their meeting held on January 10, 2001 decided to close down its operation in one particular state on account of environmental reason. Decided. Decision does not mean constructive obligation arise. They have decided, it does not mean we should create provision. Are you able to understand? Then, a detailed formal plan for shutting down the above unit was also formalized and agreed by the board of directors in that meeting, which specifies the approximate number of employees who will be compensated and expenditure expected to be incurred. Date of implementation of plan has been mentioned. Meetings were also held with customers, suppliers and workers to communicate the features of former plan to close down the operation in the said state, and the representative of all interested parties were present in those meetings. Do the action of board of directors create a constructive obligation that need a provision for restructuring? Yes. But if you write yes, they will not give marks. You need to write down this entire thing, whatever I have written. Means you need to write down what I am writing as a note. If you are writing this particular word, key entity has what? Detailed formal plan and has started to implement or announce the main features of restructuring. These are keyword. If you are writing this keyword, then only they will give marks. Otherwise, they give below average marks. 5 marks question, less than 2.5 marks. Less than 2.5 marks means less chance of getting what? More than 50. More than 50 if you are not getting, higher chances of what? Getting what? Aggregate. You are not able to get aggregate in total. Understood? So keywords. Simple, very simple. Easy. Okay. So they will ask dot to dot question. But the point is that whether you are able to write down the solution or not. You will be knowing the comment. Yes, no, you will be knowing. But how to present, that you need to understand. Keyword. Keyword you need to write down. Correct? Any doubt? Then point number 12. Disclosure. Disclosures. Write down. Refer page number 52. Now everyone try to understand. Disclosure is given in my book. You can refer it. I will discuss disclosure which are very important from exam point of view. Are you able to understand? Because writing all the disclosure will be wastage of time. It is given in a systematic order in the book. You can refer it. Are you getting what I am saying? So this will be wastage of time if I am jotting down what? All the disclosure point. If it is important from exam point of view, I'll pakka discuss that point in class. Okay? So refer page number 52. You can refer. Any doubt you can ask me after that. Point number 13. Scope. However, the scope should be the first point I am writing at the end. Scope means what is the scope of this IND AS 37. It is basically the first point of any IND AS. Write down. IND AS 37 is not applicable to point number A, executory contract. Understood why I have written at the end? Because that time you will be asking why. Executory contract. Unless they are onerous. Very good. Unless they are onerous. What is the meaning of onerous contract? Burden. Don't write burden in exam. When the cost of meeting the obligation, unavoidable cost, exceed what? Future economic benefit expected from that contract. Then it will become onerous contract. Understood? Correct. Point number B. Financial instrument. Now what is financial instrument? We have one chapter on this, which will take 8 class. So better I will not say anything right now. Refer IND AS 32 and 109. So it is not applicable to financial instrument. Now what is financial instrument? We'll discuss. Okay? Point number C. It is not applicable to income tax. Can you see we create provision for tax? It is a liability only. It is a liability. Then also it is not applicable because we have a specific IND AS 12. Correct? Then point number D. It is not applicable to employee benefit. Employee benefit. For example, provision for gratuity. So if you are creating provision for gratuity, it is a liability. A liability, but it is covered under IND AS 19. Hence, we are not discussing in IND AS 37. It is covered in IND AS 19. Okay? Then point number E. Insurance contract. Insurance contract. We have a specific IND AS for these. IND AS 104. Point number F. Contingent. Contingent consideration. Contingent consideration arising in business combination. In business combination. Because it is covered under IND AS 103. Hence it is not covered where? In IND AS 37. So it is specifically scoped out from this IND AS 37. Contingent consideration. Point number G. Provision for expected loss on construction contract. You have done AS7. I think there you have done provision for foreseeable loss. Remember this term? If you have done AS7, so that is covered under AS7. Therefore, it was not covered in AS29. Similarly, because that is covered under IND AS 11. But now it has been deleted. And a new IND AS came. IND AS 115. 115. Means in 2 years some IND AS has been deleted. Understood? So in your anyone here for numeratum? Numeratum? Okay. For numeratum, till now there is a doubt. Institute has not given any clarification whether AS 11 is applicable or IND AS 115 is applicable. Are you getting what I am saying? Okay? But from May onward, what will be applicable? IND AS 115 will be applicable. Okay. So for November attempt, there is a doubt till they give clarification, will not take any action. Okay? So of course, this will be our last chapter. Don't worry, if November attempt IND AS 11 will come, I will teach IND AS 11 for November attempt, and for balance I will teach what? IND AS 115. Nothing to worry when I am there. Okay? Understood? Okay? Point number 14. Last point. Difference between IND AS 37 and what? AS 29. Correct? So one doubt I am clearing right now, whether they can ask specific question on AS 29. Yes, they can ask. Chances are very rare. There is a remote chances. Therefore, we are not doing any accounting treatment for this. But we are discussing what? Only difference. Only difference. Have you understood? Okay. Once difference is done, automatically AS 29 will be also covered. So write down IND AS 37, AS 29. Can you give me the difference? If you remember. Point number 1. First is constructive. Constructive obligation. बताओ. Whether IND AS 37 deals? Yes. Whether AS 29 deals? We should not write down no, we should write down silent. Everyone try it. What is the meaning of does not deal and silent? If I am writing do not deals, means for constructive obligation will never create provision as per AS 29. However, AS 29 has written the word obligation. So can I say when I am saying obligation, it will cover all obligation, whether legal or constructive. Means they have not given any specific term constructive obligation. So I am saying there is a doubt when we are doing AS 29, should we create provision for constructive obligation? The answer might be yes, the answer might be no. So it is silent. It is silent. Are you able to understand? They are not saying like this, do not create. They are saying obligation. Now obligation can be any obligation. It can be legal, it can be constructive. Are you getting what I am saying? So it is silent. Point number 2. Discounting. बताओ. What? Required. If what? If time value of money is material. Have you understood? Correct? Discounting not allowed. Not allowed. But there is one exception. Only one exception. This exception I will discuss. Write down refer AS10 revised. AS10 revised. So due to AS10 revised, there was a revision in what? AS29. So there is one special point of AS10 which say discounting need to be done, and therefore one para of AS29 was amended. Are you getting? What is that para? If I will say right now, you will not understand. So I will discuss this point where? In AS10 revised, when I will do IND AS 16. Correct? Now, point number 3. That on contingent asset. Contingent assets. बताओ. Requires disclosure where? Requires disclosure in financial statement, means notes to account. Here requires disclosure where? In the report of what? Approving authority. In case of company, who is approving authority? Board of directors. Requires disclosure in the report of approving authority. Correct? Understood? Contingent asset. Last point number 4. Onerous contract. Onerous contract. This just write down. We have not yet discussed this difference point. What IND AS 37 says requires recognition of impairment loss. Now, what is impairment loss? That we don't know right now. It is decline in the value of asset. Impairment loss on asset dedicated to such contract to such contract before any provision is created as per what? IND AS 37. IND AS 37. We have taken one example of what? Building. We have taken one example of building, you remember. Suppose that was a finance lease. Now finance lease means building will come in our books. Building will come in the books of lessor or lessee. You have done AS and INA. The building will come in the books of lessor or lessee. Lessee. Even though we are not a legal owner. So suppose it was a finance lease. Now due to onerous contract, because now there is no future economic benefit, so what IND AS 37 says, first create impairment loss. Now what is impairment loss? We need to go to IND AS 36. So write down. Refer IND AS 36. I will create all links so that when you are revising, you can refer. IND AS 36. Refer IND AS 36. So first create impairment loss as per IND AS 36. Then create provision as per what? IND AS 37. Means before creating provision, create impairment loss. Impairment loss. Understood? Correct? Now, we'll not discuss more about this because we don't know impairment loss. Yaliko silent. For this para, it is silent. Only 4 difference. What is your doubt? It does not? No. Requires disclosure means you cannot may. Okay. Happy? I have not written compulsory यहाँ पर. Requires disclosure. Okay. Write down may. Okay. Understood your. Means he is saying that AS 29 does not say compulsory disclosure because director's report is not a part of financial statement. So they said it may be disclosed where? In the report of approving authority. Write down me. But is there difference or not? The point of difference. Understood? Any doubt? No doubt. 1 minute. Come to first one question, then I'll come to your doubt. Example number 24, I have said to read it, must do it. Have you read it? I said must read it. When I say must, means you should read it, but you have not read. Have you read? Example number 24, page number 43. Read. Any doubt? Doubt hai. Very good question. I have taken this question from IFRS book. Okay, we can discuss. We'll discuss some highest level also. But very good question. Point number 1. A retailer gives warranty at the time of sale to purchaser of his product. Means a retailer. There is one retailer and customer. Retailer has given what? Warranty. Okay. Under terms of contract for sale, the retailer undertake to make good by repair or replacement any defect in the product other than those caused by purchaser that become apparent within 3 years from the date of sale. So what is the time period? 3 years. Okay. On the basis of experience, it is probable that there will be some claim under warranty. So they are saying it is a possible obligation, present obligation. Agreed. An outflow of resources is probable, a reliable estimate can be made. So can I say we should create provision? So we should create provision for warranty. Then the retailer receives warranty at the time of purchase of those products from the manufacturer. Now retailer receives warranty from whom? Manufacturer. So they have one more person, manufacturer. Normally what happens? कि manufacturer give warranty directly to customer. But in this example, manufacturer has given warranty to whom? Retailer. And retailer has given to whom? Customer. So this is a question of reimbursement. This is a question of reimbursement. Understood? The retailer receive warranty at the time of purchase of those products from the manufacturer. Under terms of contract for purchase, the manufacturer undertake to make good by repair or replacement manufacturing defect. So they will only entertain what? Manufacturing defect. That become apparent within 3.5 years. So they have given 3.5 years. Correct? It should be noted that manufacturer has warranted only against manufacturing defect, whereas retailer warranty also cover additional defect that arose while the product was in retailer possession. On average, the retailer hold inventory for how many months? 6 months. Try to understand. Can you say whenever manufacturer has sold it, but there is a present obligation or not for the claim of warranty or not? So manufacturer should create provision as per their best estimate. Now, when manufacturer is creating provision, they will not ask retailer कि how much reimbursement you are booking. Manufacturer will create provision as per what? Their best estimate. Understood? Now, retailer will create provision as per their best estimate for the goods sold to whom? Customer. But can I say this provision might be due to what? Manufacturing defect also? Means they will create two provision. One is for manufacturing defect, one is for additional defect. So if there is some manufacturing defect, that will be reimbursed or not? That will be reimbursed. So can I say they should also create a separate asset when it is virtually certain that it will be received. So in this case it is virtually certain only because there is a contractual obligation. By whom? Manufacturer. Are you getting? So can I say retailer will create provision as well as reimbursement asset. It should be shown separately in balance sheet, but in SOPL, net amount will be disclosed as an expense. And the amount of reimbursement asset should not exceed the amount of provision. Understood? Any doubt? In question number 1? No doubt. In question number 2, doubt? Bolo. Done. Understood. Anyone have doubt about question number 2? Those who have read? Okay, so question number 2 you can read by own. You will understand. Okay? Correct? So this chapter is completed from my point of view. Write down some homework only for reading. I'll just give 4 or 5 questions so that you have a habit of reading. If I will not give, you will never read. Question number 2. Page number 56. Question number 4. Question number 5. Question number 7. And question number 9. Only 5 questions. So what we'll do, whatever question I am giving, so what will happen? I will also discuss. If you are not reading, then also I have an obligation to discuss now. I have an obligation to discuss. Understood? So this chapter completed from my point of view, not from your point of view. Okay? Any doubt? Bolo. हाँ, doubt. हाँ. In English. Bolo. Everyone listen the doubt. Please. Every other's doubts are also very important. So when someone is asking doubt, please listen. And if you know the answer, you will give me the answer. I will not say. So loud. I will repeat. Very good question. Same question has been asked by ICI in the Institute new book. You have read that question? Very good. Means doubt will come and that question will come in your exam. If you are thinking that same question will come in your exam, means every doubt need to be what? Cleared. I am saying same question is given in ICI book which I have given right now as what? I think it is covering that point also. What is his question? Ki business 1, business 2, business 1, business 2, and we have decided to discontinue, and there is a formal plan and we have announced it also. So I said we will create provision for restructuring cost. I said we will create provision for restructuring cost. His doubt is that because now it has been planned, now announcement has been done, and we are expecting some future operating loss. Should we create provision for that loss? The doubt is there. Anyone? Should we create provision for that loss? Announcement done, formal plan, detail, everyone done. But should we create provision for that future operating loss? Yes or no? Yes or no? Why? Future event. One single word. That is future event loss. Because business has not been done. I am saying about restructuring cost. You have announced that we will do restructuring. And the reason was that loss only. To avoid that loss, we want to discontinue. Are you getting what I am saying? Till now that loss has not, or the business has not been done. It is a future event only. It is a future event. No. There are two things, everyone. I said I will discontinue the business. That is restructuring cost. That is not operating loss, na? That is operating loss or not an operating loss? If it is covered under restructuring cost, means shifting cost. It is a shifting cost from one place to another place. You are relocating cost. Then create provision. I am talking about restructuring cost. You want to shift from, for example, I have shifted from Kachigura to Amirpet. So some cost have been involved. Some shifting cost will be there. But if I am purchasing one additional asset, that is not my cost. Whatever restructuring cost, create a provision for that. Are you getting? But due to that, will incur some operating loss. That is a future event. Do not create any provision for that future operating loss. Because that is what? Future event. Simple. Understood? Any more doubt? Any more doubt? Chalo. If you are not asking means you have understood, we can go to what? Another IND AS. Okay? Which IND AS? Very simple. IND AS 10. The corresponding AS was what? AS 4. What is IND AS 10? Events after reporting date. And what is the name of AS4? Bolo. Contingencies and event occurring after balance sheet date. They have used the word balance sheet date. IND AS has used the word reporting date. Both are same, huh? Both are same. The one difference in the name only. Now, silent. IND AS 10, most easiest IND AS. And that you are expert also. But I will assume you don't know anything. I will teach you every point. And you will feel that after the class there is some value addition. But once you need to listen, there will be pakka value addition, even though you know everything. Even though you know everything. So you need to also assume that, sir, we don't know anything. Teach from the beginning. So even after reporting that, everyone, so can I say this is our reporting date? This is what? Everyone try to understand what I am saying. Our reporting period, for example, from 1/4/2016 to 31st March 2017, so we are talking about this period, and event occur after this date, event occur after this date. Bolo yes or no? Correct? So it will be infinity. It will be till infinity na. But up to which point of time that you know? Bolo. Auditor report. Board of Directors meeting. Approval. What you have done? Approval. Approval by whom? Board of Directors. Means when financial statements are approved by whom? Board of Directors. Are you getting? So this event, whatever event occurred here, these are covered where? In this IND AS 10. We are discussing about this event, correct? IND AS 10. Any doubt? No doubt. But one question will arise. Everyone try to understand. I want perfect answer because you have done AS4. Let's see how you are reacting. How you are reacting. One second, when I am asking question, I am not testing because test has been done by ICI. Correct? Only a recap. The question arises, in Bachpan CPT, we have done periodicity concept. What periodicity concept says? Any transaction or event which is related to this year should be recognized in this year. But event occurring after balance sheet date? Are you able to understand what I am saying? Our periodicity concept says, our first class of CPT, periodicity concept that whatever period has been defined for accounting, any transaction event which occur in that period should be recorded in that books of account which is related to that year. So again, this is event occurring after balance sheet date. Whether it should be recorded in this reporting period. The answer is yes, because you have done adjusting event. You know yes. But can I say it is violating what? But my question is that whether it is violating or it is not violating. If it is not violating, why? One by one, I can't understand. Raise your hand. Why? No one is raised. But I said why? Of course, it will not violate periodicity concept. Then only this IND AS. Then only we are discussing this AS4. But what is the reason why it is? Because it is an event after balance sheet date, and we have done periodicity concept means what? Transaction and event which has occurred in that period should be recorded. Have you understood my question? So why this AS4 or IND AS 10 is not violating periodicity concept? This is the question. Raise your hand. I want to see how many of you are reacting. Even though you don't know, you can answer. There is nothing that you should know every answer. Chartered accountant means what? They need to answer every question. Because when client will come, so what you will say? We don't know. We'll get back to you. Correct. Chalo. So only 3-4 hands. Bol. Very good. One word means you know AS4. I will not ask any. Means in interview, if this question has been asked, with one word, we'll understand that you have entire knowledge about AS4. What she said? Because condition is existing on what? Balance sheet date. Adjusting event means what? The condition was existing on which date? Balance sheet date. Means can say it is related to this period. It is related to this period. Therefore, it will not violating what? It is not violating which concept? Periodicity concept. Means adjusting event are those events for which there is already what? Condition existing on balance sheet date. So can you say this IND AS 10 or AS 4 is just an extension of what? IND AS 37? Bolo yes or no? Just an extension. Provision is also created for what? Contingencies existing on balance sheet date. Means after IND AS 37 will apply what? IND AS 10. यही मतलब है. Are you able to understand? Means first write down meaning part. Meaning. Write down events after reporting date are those events which are favorable or unfavorable, and point number 2, which occur between what? Between, now we'll use reporting date. Reporting date and what? And the date. And the date when financial statement are approved for what? For issue. Approved for issue. Which occur between what? Reporting date and the date when financial statements are approved for issue. Who give this approval? Board of Director. Means what actually happens practically? Let us understand. Why this IND AS? What was the need? ठीक है, everyone? कि normally what happens? You have written this definition. Normally what happens? कि this is reporting date. After this, audit will start. One auditor will come and audit will start. Audit will be completed and auditor will give what? Audit report. For changes to be made in what? Financial statement. Correct? But if auditor requires changes, whether management will change? No. They might not change. And if they are not changing, auditor has right to qualify the report. But auditor will never qualify. Because they want what? Reappointment. Are you getting? And because of that reason, all ghotala is going on. PNB, Satyam, etc. Are you getting? Correct? So what I am saying, normally what happens, कि changes are proposed but management may or may not changes, may not require any changes. Okay? Then what happened? However, this auditor report is not yet signed by auditor, because they need to right now qualify if the changes is not yet made. So they will give a draft audit report. They will give a draft audit report, but not yet signed by auditor, because they will not change. They will qualify the report. They will qualify the report. Then after receiving audit report and the proposed changes, management will change whatever changes is required, or they will not change. So can I say now financial statements are finalized. Finalized by whom? Management. Finalized. Therefore we call it final account. We call it final account, preparation of final account. So actually it becomes finalized on this date. Means on reporting date we prepare draft financial statement. This is not final account. In your class 11, 12 or CPT we used to say prepare final account. So on reporting date it is a draft financial statement. And once it is finalized by whom? Board of Directors, it becomes final account. It becomes finalized financial statement. Have you understood this point? Once it is finalized, Board of Directors will sign it. And once Board of Directors has signed it, now there cannot be any changes in that financial statement. It cannot be amended. It cannot be amended until unless some power is given in AOA. Until unless some power is given in AOA. But normally, once Board of Directors has signed it, now there cannot be any changes in the financial statement. Means can I say, before signing of Board of Directors, the draft financial statement can be changes? Have you understood? For example, we created a provision for legal damages of rupees 1 lakh. As per best current estimate prevailing on reporting date as per IND AS 37, but the legal case was decided in favor of company. So बताओ now whether provision is required? No provision is required. Because before approval account we have understood whatever provision is created, that is actually not required. That is not required. So can I say we should reverse this provision? We should reverse this provision. Means adjustment is required only for what? For the contingencies existing on balance sheet date. Contingencies existing on balance sheet date. Have you understood? That type of event are known as what? Adjusting event. Understood? Correct. Now, one thing you understood, this is the date of approval. But there will be some doubt. What is the word they have written? When financial statements are approved for what? Issue. Issue to whom? Shareholders. Are you getting? And shareholder will also approve it. Shareholders will also approve it. Where? In AGM. In AGM. So some clarification has been given by IND AS. What is that clarification? Write down. Point number 2. Clarification. It's a very simple clarification, but they may ask specific question on this. Point number A. Financial statement are to be approved. Are to be approved by shareholders after financial statement are approved by Board of Directors. So you can see there are 2 dates of approval. Financial statement are to be approved by shareholders after approval by whom? The question arises, which is the date of approval? Batao. What will be the date of approval? So write down. financial statements are approved for issue on which date? On the date of approval, on the date of approval of board of directors. They have given this clarification. The keyword is what? Financial statement are approved for what? Understood this point? This keyword you write down. You can't write down date of approval because there are two date of approval. One is date of approval by shareholder, one is date of approval by board of directors. So which is the date for this IND AS? When financial statement are approved for issue. Correct? Then second clarification. Madam, financial statement are to be approved by supervisory board. Supervisory board. Means board of, you know this supervisory board? Have you heard? Board of non-executive director. Non-executive directors. After management approves financial statement. Management means board of director. Now what happens sometime? Suppose we have taken loan from what? A bank, 5,000 crore. So that bank will appoint some non-executive director in the company. And what they will do? They will watch if everything is going correct or not. Whether there is any fraud or not. So once the financial statement are approved by whom? Board of director. The financial statement are given to what? That non-executive director for their approval. Whether everything is correct. But they are giving approval to whom? To the finance only. Whether that approval whether that approval should be considered? No. So even though after approval by management, some approval is required by what? By non-executive director, that is not relevant. That is not relevant. Right down. Financial statement are approved for issue when what? When management means board of director. When management approves financial statement. Point number C. Right on. If financial statement are approved by board of directors after public announcement of profit or other financial information. Financial information. Everyone try to understand this point. This I need to explain. बताओ. Can I say when board of directors approve it, then only the profits are what? Disclosed to the public? Correct now? Are you able to understand? Before that, profits are not disclosed. Before that, profits are not known. Ki what is the profit of that company? So we need to wait for what? The date of approval by management. Okay? But sometime what happened? Everyone try to understand. Ki we prepare interim financial report. Quarterly report. So Q1, Q2, Q3, Q4. Okay? And can I say once Q4 report is prepared, the profit will be automatically announced. So the profit will be the cumulative profit of Q1 plus Q2 plus Q3 plus Q4. Automatically profit is announced or not? Bole yes or no? So due to interim financial report, profit is already announced. So suppose profit is interim financial report was published on this date. Now management board of directors has approved on this date. Question arises, what will be the date of approval? Board of directors. Means it will not change the date of approval. It will not change the date of approval. Understood? So these are some clarification has been given. However, it was very simple. Because date of approval will not change. Date of approval will not change. But if I will not discuss this point in class now, and if they ask in exam, then ho sakta you will think much. New question, new answer. Correct? So in ABC, the date of approval is the date when board of directors has given approval. Only one date. Only one date. Understood? Correct. So this was the meaning part. Now in this India there is not much. Because everything you know. Correct? Now if I give writing, it will not do much. So what I will do? I will take examples. Let's see how many of you are giving correct answer. So I will start with IPCC example. Then I will give some good example also. Okay? So everyone need to react. There are two type of event. What are the two type? Adjusting and non-adjusting. Adjusting will be adjusted. Non-adjusting will not be adjusted. Adjusting event are those events which provide further evidence of the condition existing on the meaning remain same. Can I take some example? No one will say anything about break. Okay, break I will decide. Okay. Can I take some example? Now, whatever I am asking, listen properly. All are exam question. All are exam question. Okay? And if you want to write down with me. Because I will give 10 to 12 example, so I will not wait for you. If you want to write down. I will be very slow. Okay? Example number 1. This is the reporting date. This is DOA. DOA means date of approval. Okay? Mr. Ram, debtor. First example, the same example every teacher will take in CIPCC. You remember? They will start with debtor only. Because you can understand debtor only. Okay? The amount due was 10 lakh. Okay? What happened? Before approval of account, FIR occurred. ओए, अब मैं गुस्सा आएगा मेरे को, बहुत किच 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 कर रहे. Fire occurred in premises of Mr. Ram, and due to heavy loss, he became insolvent. Now, because of insolvency, no amount is recoverable. No amount is recoverable. बताओ, adjusting, non-adjusting. Non-adjusting? चलो, okay. Very good. The first example, I was expecting correct answer only. Non-adjusting event. Because there was no condition existing on balance sheet date. ठीक है, okay. Thank you very much. No explanation required for this. Okay. Can I move? Okay. Example number 2. Reporting date, balance sheet, date of approval. One second, Mr. Ram. And the amount due was what? Amount due is 10 lakh. But, everyone, on reporting date, he was a doubtful debtor, lakh. The due date has been expired, but till now he has not paid the amount. But he is not saying, I will not pay. But he is not paying also. So he become a doubtful debtor. Now, as per our past experience, we have created a provision for doubtful debt. Understood? And we have created a provision for doubtful debt at 10%, 1 lakh. In our draft balance sheet, this draft 9 lakh. Are you getting what I am saying? 9 lakh. Now, Mr. Ram was declared insolvent. And no amount is recoverable. Bolo. Adjusting event, non-adjusting event. Huh? Adjusting, non-adjusting. It is an adjusting event. Those who are saying non-adjusting event, that is wrong. Why? Because there is a condition existing on what? Balance sheet date, that he was a doubtful. He was nalayak. He was nalayak or not? So we have estimated 1 lakh, but our correct estimation should be how much? 10 lakh. Understood? So this event has given further evidence of the condition existing on balance sheet date. Understood? It become an adjusting event. Now, everyone, try to understand this point. What adjustment entry will pass? I am giving you 2 options. First is PL, account debit to provision for doubtful debt, will increase by what? Will increase by 9 lakh. This is the first. And second, by no provision, but we should pass the journal entry of bad debt. Bad debt to debtor. Are you getting what I am saying? Because no amount, it become a bad debt now. Bad debt to debtor. Of what? 10 lakh. Of 10 lakh. I have given you 2 adjustment entry. what adjustment need to be done. So I have given you two adjustment entry. One is PL account provision will be increased by 9 lakh, so it will become 10 lakh. Or we should pass one bad debt entry, bad debt to debtor. When you are writing provision, debtor does not become nil. It is once again 10 lakh. It is coming 10 lakh, but we have created provision. And when you are writing bad debt will reduce the amount of debtor. But what adjustment will pass? Point number 1 or point number 2? Point number 1, point number 2. 1, 2. 1, 2. 1, 2. How many are saying 1? What I say? How many are saying 2? How many are saying 2? How many of you have some different answer? Different answer. Hey, chup. हाँ, I written no provision, तो reverse हो गया. We reverse it. हाँ, reverse. No provision means reverse 1 lakh ना. We'll do reversal. That is no provision means reversal, right? I will write everything. Try to understand my emotions. If you will not understand my emotions, you will get motions. Now, how many of you are saying 2? 2. ऐसे उठाओ. Those who are saying 2, all are wrong. And because of you, you are in my class. Understood? I have proved that after this IND AS 10, you will have some value addition. So whatever you have done, keep it there only. And now listen me carefully. Even though it is easiest topic, in Bachpan you have done one order, chronological order. What was the meaning of that? Ki transactions to be recorded when it has occurred. But of this transaction, bad debt occurred when? On this date. This bad debt is not for the last year. There was a contingency last year. Actual loss was not there. Actual loss happened when? In the current year. Can we record actual loss in last year? No, Baba, no. What IND AS 10 says, you need to adjust the amount of assets and liability which is already created. So you have created provision of 1 lakh. No, it is not a provision of 1 lakh. It should be the best estimate of how much? 10 lakh. Which will give a fair view to the user of financial statement that loss might happen in the next year, which amount to rupees what? 10 lakh. But if you are writing actual bad debt, it means it is a loss of which year? Current year. Wrong. So this is 100% wrong. So if your teacher has done this, it was wrong. The entry should be what? You need to write down provision how much? 9 lakh. One more point I need to discuss. Everyone try to understand. This is what extra gyan. Not required from exam point of view, but required for an auditor. This you understood? Any doubt? So this is the correct journal entry. Now, in your Bachpan you have read 2 type of account. One is provision for doubtful debt. One is provision for bad debt. But both are same or different? Bolo. I think you have done 2 accounts. Provision for doubtful debt. Sometimes they write provision for doubtful debt. Sometimes they say provision for bad debt. So they are same or different? Provision for doubtful debt and provision for bad debt are same or different? Different. What is the difference? Huh? Very good. Now this is provision for what? Bad debt, not doubtful debt. So we will not write provision for doubtful debt, we write down provision for bad debt 10 lakh. So that user can understand that it is now confirmed that the loss is going to happen. Loss is going to happen. But when you are writing provision for doubtful debt, means we are not sure about the amount. We are not sure about the amount. So when we are writing provision for bad debt, means we are sure about what? Amount of loss. We are sure about the amount of loss. Understood? Correct? But in exam, these are interchangeably used. Interchangeably used. So from exam point of view, these two accounts are interchangeably used. Understood this point? Now, I am giving you very simple question. Just once again, be careful before giving answer. Example number 3. Reporting date, date of approval. Once again, Mr. Ram. Mr. Ram, 10 lakh. And we have created a provision for doubtful debt amounting to rupees 2 lakh as per our best estimate on reporting date, correct? Have you understood? So what happened on reporting date? We have been informed that Mr. Ram went to Pakistan and he will not come back again. So now we are doubtful. So we have created a provision of 2 lakh as per our past experience. Now you can't challenge this 2 lakh. This is as per the best estimate of what? Management. So right now I am the management. As per my estimation, this is 2 lakh. Are you able to understand? Now why 2 lakh? You can't ask me question right now. As per my best estimate. Okay? But what happened? Before approval account, he came back from Pakistan. And he has paid also what? 10 lakh. Batao, whether any adjustment required? Yes or no? Yes or no? Adjustment required? Yes. What adjustment? Reverse provision. No provision required. No provision required. Reverse the entire provision because collection is sure. 100% certainty of what? Collection. So no provision. No provision. Understood? It become an adjusting event. And no provision is required. No provision is required. अच्छा बताओ, when will pass the journal entry of collection? That is next year only. That is not now. Correct? Understood. Last example before break. We'll take many examples. Example number 4. This is an IPCC level question. IPCC 2 times it has been asked in exam. It might be you may be knowing this, but I need to do a recap. Very good question. This is a reporting date, and this is what? Date of approval. Mr. Ram, 10 lakh. ठीक है? Now no provision was created. ठीक है? So amount was receivable. He was a good debtor only. Correct? But what happened? Before reporting date, check was issued by whom? Mr. Ram. Check was issued. Correct? And the check was that dated 29th March. 29th March. It was issued before reporting date. It can be a possible situation. But received after reporting date. Means this check was received after reporting date. But the check date is what? On or before 31st March. On or before 31st March. But even the check was dated before 31st March, the check was received after 31st March, but the adjusting or non-adjusting? Non-adjusting. Pakka? Yes, sir. You remember now. Same question you remember? Very good. Why non-adjusting? If you give me correct answer, means perfect answer, then I'll give one chocolate. When I say chocolate, to raise your hand.
because I can't give to all. Raise your hand, I can ask anyone. If you give me the perfect answer, I'll give one chocolate. Raise your hand. Only two. Perfect means you can say anything. 70% if you are giving correct is perfect because you are rank holder. If you are, if you are getting 70%, you are getting rank. And if you are getting 60%, you are exemption, exceptional student. And if you are 50%, means you are CA. You are CA. Below 50%, then difficulty. No, you are not upcoming. You are CA. Bolo. 2% only. Bolo.
Because we received the check after balance.
This to everyone will give a. This answer is not perfect.
BRS may go.
This is what IPC student also give. I want perfect.
It depends upon the situation that whether he has given to our company consultant, I mean company stockbroker.
This everyone can give this answer.
Because collection entry is already posted.
Okay?
Collection entry is already posted. Check in transit.
No. This entry will be done here. हट लाला है. Check in transit, the entry will be done here, not on reporting date. I want perfect answer. Now I'll give the answer.
Does not affect the schedule that are paid till the reporting date.
And this is what everyone will say this answer. I'm going to say perfect, that you are chartered accountant, it will be understood. एक बार एक करके. अरे यार क्या यार.
Date on which it is received or the date which is written on the check should be considered.
ये तो मैंने बोल ही दिया यार. That's why non-adjusting. Check issued by. Chalo, I'll give. Means you have not read the suggested answer given by ICI. Now. Very good. Perfect answer. Clap. Chartered accountant. Means I will give in writing, you will become CA, but time will decide. Time will decide. Pakka you will become CA. There is no control over this check on 31st March, and because of that reason it is not an asset on 31st March. What is the meaning of asset? Asset means the resource which is controlled by what? Entity. Token is on 31st March not received, whether it can be endorsed. If not received, whether it can be endorsed. If it cannot be endorsed, means no control, we can't use the check. Therefore, it is not my asset. If it is not my asset, question recording will not arise. Control. Perfect answer. So, देखो, it is not an asset. Not an asset on a reporting date. Why? As no control over checks. No control over checks. Understood? Understood? Can we take break? Break for how many minutes? 10 minutes.
चलो एग्जाम्पल नंबर 5. Now on example whatever we'll take will be थोड़ा interesting. ठीक है? Reporting date date of approval. There is one inventory which is obsolete. On reporting date. Correct? Cost price 1000 and NRV is 800. So we have done valuation at 800 as per IND AS 2 or AS 2. Means a loss of 200 is provided. Loss of 200 is provided. ठीक है? Okay? बोलो. So as per the condition existing on balance sheet date, we have provided loss of 200 on draft financial statement. But before approval of account, this inventory was sold at rupees 600. बताओ. Adjusting, non-adjusting. Adjusting, non-adjusting. It is adjusting event. Why? Because now it is giving an estimation of NRV. Try to understand. We estimated 800, but actual estimation should be how much? 600. Means can this event provide further evidence of the condition existing on balance sheet date? Therefore, it is an adjusting event. Means can I say the value should be what? The value should be 600. And we should recognize the loss of what? 400, not 200. We should recognize the loss of 400. So the sale of inventory, everyone, sale of inventory before approval of account provide further evidence of the condition existing on balance sheet date. Therefore, it is an adjusting event. Therefore, it is an adjusting event. Correct? Understood? Understood? Bolo. Any doubt you can ask me? No doubt? Product value not, product NRV. NRV. What is the meaning of NRV? Hey, please. Not realizable value, estimated realizable value. It is What is the meaning of NRV? NRV means estimated sale price minus what? Estimated selling expense. Means can I say you have done an estimation on reporting then as per the best estimate? Now it was actually sold before approval account at rupees 600. Means can I say it is giving further evidence of the condition, of the estimation, whatever you have done. You estimated what? 800. But actual event says it should be what? 600. Now try to understand. Can I say it will be wrong? Try to understand everyone. Suppose the figure in crore. Figure in a crore. Don't think about 800 rupees. Figure 800 crore. So actual valuation is what? 600 crore. Now you only say should be reported 600 or 800. Then so every management will say it can be sold at 1200. I will sell it, prove it. Then so every management will try to what? Sell it at what? 1200. So this is giving a further evidence of the condition existing on balance sheet date. Ki management said what? 800. But now it is proved. It should be how much? 600. Therefore, it is what? Adjusting event. There is no fighting यहाँ पर. ठीक है? Your doubt, I will say, you need to understand whatever I'm saying. Whatever you have done in IPCC, try to understand. I'm not saying you have done wrong, but interpretation might be wrong. Interpretation might be wrong. Are you getting what I'm saying? So please be careful and listen whatever I'm saying. It is providing further evidence or not? Correct. Correct. Understood? Again. Now, I will give many examples. Don't worry. Till you become expert, I will not leave you. Example number 6. Everyone. ठीक है? There was an inventory. Inventory? Correct? Bolo. Have you understood? Now, cost price is equal to 1000. Correct? Cost price is 1000. And NRV is question mark. Question mark. Means management are not able to estimate it right now. Management are not able to estimate. Are you able to understand? It can be a situation. Have you understood this point? Or I can say in this way, management says 1200. 1200. Both possibility might be there. Both possibility might be there. Have you understood this point? Okay? Now, this was actually sold at what? 950. Actually sold at 950. Batao. Adjusting even, non-adjusting even. Adjusting even, non-adjusting even. Huh? Adjusting, non-adjusting. Adjusting event. Once again. Adjusting event. Why? Can I say this all inventories are held for sale? These all inventories are held for sale. When I say inventories are what? Held for sale. Only we don't know the sale price. We don't know the sale price. And that is nothing but NRV. NRV means estimated sale price. Estimated sale price. So can I say this event also provide further evidence of what? Condition existing on balance sheet date. Therefore require adjustment. Therefore require adjustment. Have you understood this point? Correct? So management has given 1200, but this evidence, this event has proved that this should not be 1200, this should be what? 950. This should be 950. But I will take one more example which will clear all your doubt. Example number 7. Which will clear all your doubt if it is coming in your mind. Okay? Inventory and cost price 1000 and NRV was what? 1200. But what happened? Before approval account, a fire occurred and it became damaged. Now, this damaged goods were sold at rupees 800. Batao, adjusting, non-adjusting. Now it become what? Non-adjusting. Now it is non-adjusting. Because this damaged condition was not there on reporting date. So this reduction in price is due to what? Fire, and fire means due to damage. So this is not NRB on reporting date. This is not NRB on a reporting date. Now I think you have understood. You can relate what? Previous two example with this example. In previous two example, condition was there on reporting date. But here the condition of damage was not on a reporting date. Therefore, it will be what? Non-adjusting event. Non-adjusting event. I think now you have understood. Any doubt? You can ask now. Now, if the reason behind you will say the reason is due to after effect, then it will become non-adjusting. I was silent about this point. I have said nothing, no other event occur. Are you getting? Now you will say that some event occur because of that price decline. So once again it becomes non-adjusting event. Are you getting? So it does not become obsolete after reporting date. It does not become damage after reporting date. So that for that I was silent now. Means it was same inventory. The same inventory was sold at what? 950. So it is providing further evidence of the condition existing on balance sheet date. And same thing is written in IND AS 2 also. Same thing written in IND AS 2 also. Understood? That is after effect now. Then it will become what? Non-adjusting event. But I was silent about that point now. So in this case, because it was held for sale, so that condition was there on what? A reporting date. Understood? Correct? Bolo. Any doubt? Example. Number 8. Now, there is one machinery, everyone's machinery, carrying amount is 1 lakh. Carrying amount is 1 lakh and is sold at 90,000. Batao, adjusting, non-adjusting? Non-adjusting. But similar example we have taken for inventory. Yes, machinery is not held for sale. Oh, acha. Try to understand. Machinery was not held for sale. So there was no condition existing on a reporting date. No, it was sold before approval account. So it does not mean we need to adjust it. Correct? So non-adjusting event. Non-adjusting event. Okay? Understood? This point you understood? Example number 9. This question have been asked both in IPCC and CA final. But the answer given by suggested, the answer given by ICI suggestion, whatever we say, from my point of view, thoda sa alteration is required. Let's see what you give. First, plant and machinery carrying amount 1 lakh. 1 lakh. And before reporting date, an agreement was entered for sale. Entered for sale. And before approval account, after reporting date, the registration of sale completed. Registration of sale is completed. Are you getting? This is a question if you remember. If you remember in CA IPCC. But whatever answer they have given, I am not okay with that. Batao. Adjusting, non-adjusting? Adjusting means sale price. Sale price 1,20,000. 1,20,000. बताओ what entry will pass यहाँ पर? What adjustment you'll do? What adjustment you will do?
We have to check the possession of the nation.
Position.
Possession. Like who is having the control of the nation. If the control is given before the reporting date, then we have to take it as well.
Very good. But this is not suggested answer. Very good answer. 100% correct answer. Try to understand what will be the correct answer. This question is actually not of IND AS 10. पहला तो. This question is not of IND AS 10. This question, try to understand. Agreement done before balance sheet date. So we need to check whether a risk and reward transferred. If risk and reward transferred, will pass sale journal entry in this point of time. Means we record what? Record what? Bank, if suppose the amount is not received, a receivable account debit to what? Machinery 1,20,000 and will book a profit of what? 20,000. Machinery account debit to PL, or you can write down 1 lakh. You can write down 1 lakh. Correct now? And how much profit? Profit is equal to what? 20,000. Why? Because this registration is only a formality. As per what? Substance over form. As per substance over form, we do accounting treatment based on what? Intention of the transaction, not because of what? Legal ownership has not been transferred. So even though legal ownership has not been transferred, a risk and reward has been transferred, so sale need to be accounted on this date. So this is not a question of what? IND AS 10. This is not a question of IND AS 10. There is no question of adjustment required. Even though registration not yet completed before approval account, then also sale need to be done. Are you getting? Suppose registration completed यहाँ पर, then also sale journal entry need to be done because risk and reward has been transferred. Agreement done, but suppose due to some event, due to some circumstances, a risk and reward has not been transferred, then no sale journal entry. Then no sale journal entry, even though registration completed before approval account. You need to think whether risk and reward transferred on this date. No risk and reward transferred. The question of sale will not arise. The question of sale will not arise. Are you able to understand? The perfect answer should be what? Whether risk and reward has been transferred. So in the IPCC question, yes, ये final question, this was missing in the question. So we need to give both the option. If risk and reward transferred, then pass journal entry of sale in the current year only. And if risk and reward is not transferred, then no sale journal entry in the current year. In the current year. Have you understood? So this become a perfect solution, perfect answer. But they have given adjustment. I don't know why. No adjustment required. If risk and reward transferred, the question of registration will not apply. Understood this point? Correct? Have you understood this point? Doubt? Any doubt? No doubt? If risk and reward not transferred, then no question of journal entry. No question of adjustment. Even though registration completed before approval of account. Because risk and reward was not transferred on a reporting date. On reporting date. Understood? Huh? If it is what? Fixed asset? Now, everyone, try to understand. Everyone. Okay. When risk and reward transferred, then it is not held for sale. It has been sold. First point. First point. If a risk and reward has been transferred, then it is not held for sale. It is sold. But if it is held for sale, then we need to go to IND AS 105. Held for sale, then we need to go to IND AS 105. I don't want to discuss 105 right now. Because this will be completely new IND AS. Understood? Correct? Understood? So if risk and reward has been transferred, it is sold, not held for sale. But suppose you are saying it is held for sale, then we need to go to which IND AS? IND AS 105 coming soon. Coming soon. Any doubt?
If we have considered that the risk and reward are already transferred, it means that we have passed the sales order. So the machine should not exist on the reporting.
No, it will not come. Machinery will be deleted from financial statement. Correct. 100% correct. Understood? Any doubt?
After reporting date, is there any modification to agreement?
Now try to understand. If risk and reward transferred, it means modification cannot be. It is very rare situation. Huh? You are saying risk and reward transferred and I want to modify the contract. It means risk and reward was not transferred. It means risk and reward was not transferred. So why you are saying risk and reward has been transferred? The modification can be done only when that was a proposal. So I will say it was not an agreement, it was a proposal to sale. The proposal can be modified. Proposal can be modified. Agreement, if the risk and reward has been transferred, and in rare situation it will be modified. Okay? So I will say if they have said proposal, because they have asked two questions, one is based on proposal, one is based on agreement. So whenever agreement done, it means risk and reward transfer, prima facie. But if it is a proposal, means risk and reward is not yet transferred. Have you understood? Correct? Understood? Any more doubt? It is not an adjusting event. Non-adjusting event means no risk and reward transfer. The question of IND AS 10 will not apply, I will say. The question of adjustment or non-adjustment will not arise. Risk and reward not transferred. So it is not a sale. Will not pass any journal entry. Even though registration completed before approval of account. So what I am saying, this is not a question of IND AS 10. Understood?
We have the plant and machinery, but it's not held for sale yet. It is just a proposal.
Yeah. Correct? Proposal means what? Whether risk and reward transferred? No. So whether it will pass sale entry? No. Agreement, if risk and reward transfer, it means what? Sale entry need to be done. Sale entry need to be done only this much. Okay? Next. Next point. Example number 10. Example number 10. Silent. Silent. Example number 10. Now, there was one High Court case was pending. And as per IND AS 37, IND AS 37, we created a provision of 10 lakh. We have created a provision of 10 lakh. Understood? As per IND AS 37, we have created a provision of 10 lakh. Because of what? Obligation existing on balance sheet date. It was a present obligation. But before approval of account, case decided. Now there can be two situations. First, point number 1. In favor of company. In favor of company. But what you will do? Reverse na. So this will be reversed. Means adjusting event. Adjusting event. Very good. Reverse it. Now no provision is required. So if the case was decided in favor of company, so now no compensation. So whatever provision you have created, that is not required. Reverse it. Adjustment required. It become an adjusting event. Okay. Second. Understood? It was decided against company. Against company, and now it is payable. The amount payable is equal to how much? You are 9 lakh. 9 lakh. But what you will do? Then what you will do? Adjusting, non-adjusting? Adjusting. And you will decrease your provision by what amount? So once again, adjusting. Adjusting event. In both the case, it will be adjusting. whether favorable or unfavorable. Therefore, they have written this event occurring after balance sheet date can be favorable or unfavorable. Favorable or unfavorable. Favorable does not mean we are recognizing profit. The event is favorable. We are not recognizing profit. The event is what? Favorable. Understood? This point you understood. Bolo. Correct? Have you understood? Now, one very interesting question. First, though, I will take the question which was asked me in doubt in the break. Because very good doubt. Practical doubt. Somebody asked me. Example number 11. You become what? Chartered accountant now. Because that is a practical doubt. Suppose this situation arises when you are going to audit. What comment you will give? What comment you will give? Reporting date. Date of approval. I will give two questions. First, the doubt question. Check was issued to a supplier. Dating 31st March, amounting rupees 10 lakh. So of course we have passed one journal entry. The journal entry is what? Supplier account debit to bank. Supplier account debit to bank. This entry is done. Everyone. Now what happened? Because you know that the check will become stale if it is not deposited in bank for how many months? 3 months. So before approval account, the check become what? Stale. Are you getting? Batao. Adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting, non-adjusting. Pakka? Pakka? Correct. 100% correct. Non-adjusting. Anyone have doubt? Please ask me. It is a non-adjusting event. Because there was no condition existing on balance sheet date that it will become stale. And it is I will say this is what mistake done by what? Supply. My liability decrease. You come and take another check. My liability decrease or not? Once I issued a check, my liability decrease. Means the intention was there to what? Pay. If the intention was there to pay, I will decrease my liability. I will decrease my liability. But another question. If you can answer this question, means you become expert. You become expert. The last question, which is not yet asked in exam. This I am giving once again a practical viewpoint. Example number 12. Sorry. Think and say. Apply your common sense. You are an auditor. This situation came. What you'll do? Reporting date. Date of approval. Check was issued. Check issued amounting to rupees 10 lakh. Raise your hand, okay? Don't shout. Before approval account, the check was dishonor. The check was dishonor. But the adjusting, non-adjusting. Adjusting, non-adjusting. Thora think. Whenever somebody asks question, I see a think for 5 minutes. Because they give only correct answer. CA do not give a wrong answer. Give time. I have ample time. I will sit down till you react. Think. When I am asking question, think twice before answering. In exam, this question will come. You write down correct answer, na? Correct, na? Bolo. Now, answer. How many are saying adjusting? How many are saying non-adjusting? Non-adjusting. So can you give me reason for non-adjusting? Bull. There is no condition existing, correct. I think everyone is saying that only. How many are saying adjusting? Can you give me the reason? Those who are saying adjusting, who want to give reason? Why adjusting? Why adjusting? Please raise your hand. I need to understand who is speaking. Bull. It should? Suppose there was balance on reporting date. Now. Suppose there was balance. After reporting date, it become what? Zero balance. Now. Adjusting, non-adjusting. Reason. You want to give reason? Adjusting wala. हाँ हाँ What you said? Can you speak in? Speak. I am understanding. Stand up. I am understanding. Na Telugu. I was understanding, right? But please give a big clap to him. Big clap. From my side, one chocolate to you. Perfect answer, whatever you have said. Such a good explanation. Whatever you have said in English that I have understood that time only. So that Telugu was a replica of what English I have understood. So the Telugu answer was also correct. Also correct. Very good answer. Means you have said everything about the solution. Everything. You have not left any point. Pakka you will become CA. Time please you decide. Time please you decide. From my side you are a chartered accountant right now. But write the exam and become CA as soon as possible. Perfect viewpoint. Can I say check was issued. Now it was the responsibility of management that it should be what? Cleared. At the time when the supplier is depositing this check to what? Bank. So it is the responsibility of what? Management. If it is dishonor, there was a condition existing on balance sheet date about the dishonor, even though this information was not known to management. Because here the responsibility belonged to whom? Management. Perfect answer. Perfect. This is a, we say, chartered accountant answer. Have you understood? Have you understood the viewpoint? So write down. This is an adjusting event. This is an adjusting event. Even if information of dishonor was not known to management. Are you getting what I am saying? Otherwise, what will happen? Every entity will issue check and reduce their liability, and then they will dishonor. So that is not what? Correct view, na? That is not fair view of financial statement. You have issued check, then you will dishonor it. So on balance sheet date, your liability decrease, every bank will give you loan. Are you getting? Because bank will give loan on the basis of what? Financial statement. A company with low liability is a good company. It's a good company, na? So everyone will do like this. They will issue check, dishonored. Understood? Correct? Now, from my point of view, I have taken a lot of example. Now you refer the questions given. Any doubt you can ask me. After approval, so we cannot change the balance sheet now. Once it is approval, no. Try to understand. First, though, dishonor will not take such time. This is around 3 to 4 months. Whatever. What I am saying, this is what? This is a reasonable time that check will become what? Dishonor. Are you getting? So if the check need to be dishonor, it will dishonor before approval account. If not dishonor in any circumstances, then we cannot change the balance sheet. What? Once it is signed by director. The intention is that before approval account, whatever event occur that need to be adjusted if adjustment required. Understood? Correct? Now, write down. Point number 3. After my example, a lot of discussion will be there. Because now you will talk, we have done in IPC this. Everything has been changed. Who is this teacher? Are you getting some value addition? What you are feeling? Some addition value or reduction in value? Addition in value, na? So you will become expert, don't worry. I will make you expert from what? Front side and back side both. IPCC and final both. Any doubt you discuss, then you ask me. Any personal doubt also you can ask me. Chalo, now, can we start? I need to complete the writing part now, so that we can start new IND AS tomorrow. Okay? Write down. Types of events. Everyone silent? Silent. Adjusting event. Non-adjusting event. Correct? So batao, what is adjusting event? Event which provide further evidence of what? Conditions existing on which date? A reporting date. Now everything reporting date. Okay? Now I have used the word further. This further word is deleted in IND AS. Means it was in what? AS4, deleted in IND AS. But it will not make any changes in the definition, which provide evidence of further evidence. Both are same. Are you getting what I am saying? Correct? तो बताओ, what will do about such event? Such events are adjusted where? Adjusted where? In financial statement. Adjusted in financial statement. ठीक है? So when I am saying adjusted, so what need to be adjusted? So can I say adjustment is required in what? Asset or liability or income or expense or expense. So you need to adjust the asset or liability and income or expense. Okay, sir? ठीक है? Financial statement of which period? Of reporting period, na? Of reporting period. Any doubt? No doubt. So what is non-adjusting event? Which relate to conditions arising after a reporting date. So that event relate to condition which is arising after reporting date. Are you getting? तो बताओ, what will do? No adjustment required. However, बताओ, disclosure where? However, disclosure of such event. Disclosure of such event where? बोलो. As per AS for where? Report of approving authority. But as per IND AS 10 where? In financial statement. Understood? So, however, disclosure of such event is required in financial statement, that is notes to account, if amount is material. Of course, if amount is immaterial, we can ignore. If amount is material. Now you know material, na? Correct? But now what I'll do, I'll give you some examples of non-adjusting events so that you have an idea that these are not adjusting events. That on? For clarification, examples of non-adjusting event. First, decline in market value of investment. This is non-adjusting. Point number B. Business combination means one of the example is what? Amalgamation. Business combination, you can add an example, amalgamation. Even though negotiation negotiation was there on or before a reporting date. Point number C. So any business combination will be a non-adjusting event even though negotiation was there till actual agreement happened. So if there was no agreement before before reporting date, it cannot be adjusted. It cannot be adjusted. Okay? Detailed discussion write down. Refer IND AS 103. You'll become expert there. Okay? Write down. Announcement of plan to discontinue before approval of account. So if there was an announcement of plan to discontinue after reporting date before approval account, so it is also what? Non-adjusting event. Because we have done provision for restructuring cost will arise only when there was an announcement before what? A reporting date. Before reporting date. Understood? Point number D. Write down. Purchase. Any purchase of asset will never be what? Adjusting event. Classification of asset other than inventory as held for sale after reporting date. One second, we'll become expert in these. Let us refer IND AS 105. Point number F. Changes in foreign exchange rate. But as per AS 11, monetary items to be reported at closing rate or future rate? Closing rate. So any changes are what? Non-adjusting event. Correct? Then, point number G. Major litigation after reporting date. So any legal case filed after reporting date is not a adjusting event because there was no condition existing on a reporting date. So these are the few examples for clarification. Understood? Correct. Now write down. Point number 4. Special case. There are some special points that we will discuss. There are 4 special points of this chapter. 2 you have done in AS4, 2 extra. You have done 2 going concern and proposed dividend. Remember? So that 2 we'll discuss and then 2 extra. So first write down a new point. So the interest will be there. Point number A. Long-term loan. We call it non-current liability. First let us discuss it. Then I'll give in writing. What is your viewpoint? ठीक है? Whether it is adjusting or non-adjusting, I think you can give the answer. Suppose one loan was taken, means there was a loan which was payable after 5 years. After 5 years. So it is non-current. We should classify it as non-current. But as per the terms and condition of the loan, if there is any breach of contract, means breach of terms and condition, means if the party has done some breach of contract, then this loan will be converted into loan repayable on demand. Are you getting? So this long-term loan will be converted into loan repayable on demand. So any loan repayable on demand is a current liability. It is a current liability. So if there is any breach of contract, so this loan will become loan repayable on demand. And if it become repayable on demand, then it will become what? Current liability. So what happened? Before reporting date, there was breach of contract. Any breach of contract, I am not going to that point. Correct? Suppose the interest was not paid on due time, principal was not paid on due time. These are only breach of contract. Correct? But what happened? Before date of approval, one meeting was held. Are you able to understand? And they have agreed that now bank has agreed that even though there was a breach of contract, it will not be demanded. It will not be demanded. Have you understood? Before approval account, there was a meeting between financial and the party. Now bank has agreed that even though there was a breach of contract, it will not be demanded. It will not be demanded. But this is what? Before approval account, but on reporting date, it should be classified as current liability or non-current liability. Current or non-current liability? What do you think? It should be current or non-current? Non-current, current. How many are saying current? Why? Huh? Yeah. Breach of contract was before reporting date. No. Whether there was a condition existing on the date for the breach of contract? Yes or no? And that was waived or not? It was waived, it was cancelled or not? Automatically it was waived. Are you getting? So can you say there was a condition existing on balance sheet date and this event provide what? Further evidence of the condition existing on balance sheet date. Therefore it will what? Non-current liability. It will be considered as what? Adjusting event. Adjusting event. So one clarification given, in this case, it will be always what? Adjusting event, and it will not be current now, it will be non-current. On reporting date, it was current. But the meeting was held and it gave a further evidence of the condition existing on balance sheet date. Now it is no more current. It become what? Once again, non-current. Understood? We are done. Very important. Expected question on this. Expected. However, I have expected in this May attempt only, but it was not asked. So pakka in November not to May. Pakka one question on what? This part. Okay? Write down. Whenever, now what they have said, whenever there is breach of material provision in case of long-term borrowing. In case of long-term borrowing. Correct? On or before reporting date. On or before a reporting date with the effect such loan become payable on demand. That is current liability. Correct? Such loan will be classified as non-current if lender agree not to demand payment before what? Before bolo approval of financial statement for what? For issue. And this is the keyword. Before what? This. So it will be classified as non-current if this event occur. Otherwise it will remain what? Current. Okay? But if you see, I have started with one point. What I have written? Whenever there is a breach of what? Material provision. Correct? Give one circle on that. So what they want to say? Let us have a clarification for this. Written? So what they want to say? If there is a long-term borrowing, and there is a breach of contract, before what? Before reporting date, correct? So there can be two types of breach of contract. One is what? Minor default. Minor default. Minor default means, suppose ki submission of stock report. There might be some delay in submission. Submission of what? Financial statement. There may be some delay in what? Financial statement submission. So this is a minor default. So for minor default, bank will never demand. Are you getting? So if there is a minor default, it will remain non-current liability only. Non-current liability. Correct? But if there is a major default means non-payment of interest, non-payment of principal amount on due date, this becomes major default. Are you getting? Then there are 2 points. If lender agree Not to demand. Not to demand. Before what? Not to demand. Before date of approval. Before date of approval. So बताओ, this will what? Then it will be non-current. Non-current liability. But in other cases, whatever cases, this will what? Current liability. Current liability. Have you understood? So if there is a minor default, it will be non-current only. But if there is a major default, it will be current. But if this event occur before approval of account, it will be still classified as what? Non-current liability. ठीक है? Understood? This point? Easy? Write down this. Written this. Write down this. Refer IND AS 1. So once again we'll discuss this point where? IND AS 1. Once again, I will create link so that at the time when the entire chapter will be completed, you can link it. You can link it. Understood? Correct. Any doubt? No doubt. Last point for today. Done? What happened? Written? Last point. Write down. Point number B. Going concern. Everyone, try to understand what actually happened with FR. Everyone try to understand what actually happened with FR subject. I need to clear this point before actually the entire syllabus is going to complete. You need to know this point. Old syllabus and new syllabus. Old syllabus was, I will say, if this is 100%, so this is only 60% of this 100. Are you getting what I am saying? Volume, as per volume. It was 60%. And we used to take 60 days for what? FR. This old syllabus. Every teacher used to take what? 60 days. Are you getting what I am saying? But in 60 days we used to what? मजा आ रहा है भाई आराम मतलब आराम से. But if this was 60 days, it need to be days. How many days? It should be approximately 100 days. बोले ऐसा ना मजा आएगा. But now, how much days you are giving to me? Because if I'll take 100 days, you will not come. Now in this 70 days, I have no time for relaxation. And if you want relaxation, give me 100 days. I am ready to teach you. In that phase only. In that phase. Are you able to understand my point of view? So because of that reason, I have curtailed the relaxation time. Or what will happen? I need to curtail the syllabus. There are two things. Either I need to delete what? Some relaxation time. I delete what? Some syllabus. Syllabus if I delete, that is wrong from your point of view. Because I need to make you expert in any case. In any case. Because of that reason, because there is so much volume, so much new point, so much learning phase. So I don't have time. But I need to make you expert in these 70 days only. So limited time. And because of that reason, I need to teach. Because I also understand sitting in the class for 3.5 hours is very difficult. Now we can't sit in movie hall also. Arey yaar, kaun hai? But I need to take a call. Because of that reason, thora adjustment is required. But after the class completion, you will feel that you have learned many things from my class. Okay? So give me this, only this favor I want. Or give me 100 days. What do you want? 70 or 100? So please. 60. How many want 60? Then I will delete syllabus also. Okay? Then going concern, then I will teach IND AS 10, There are 2 new points. 1 point I have done like this, and the last point I will do. Over. You are expert from IPC. One example I will take about debtor. Bye-bye. Every teacher do like this, but I think you have understood what is the importance of entire thing. If I will not teach, you will not understand what you don't know. If I say you have done in IPC, what will happen? You will not understand actually this much was the volume. Correct? So please be with me. Write down going concern. Now this point also you know, but there are some changes. Point number 1. देखेंगे. An entity shall not prepare financial statement as per what? As per going concern, if point number A, it intend to liquidate or ceases trading, intend to cease trading, or point number B, has no realistic alternative but to liquidate, means there is no other alternative. For example, there is what? Notice from government to what? Stop the entire business. For example, ban in liquor in Bihar. Are you getting? So all the company need to liquidate. There is no other option available. Are you getting? So if an entity shall not prepare financial statement as per going concern, so what they will do? Point number 2. Because if going concern assumption is not appropriate, that is become invalid after a reporting date, IND AS 10 require a fundamental change in the basis of accounting, rather than adjustment to financial statement, Point number 3. Just write down, we'll do explanation part tomorrow. IND AS 1 require following disclosure. IND AS 1 require following disclosure. If financial statements are not prepared on going concern, point number A, fact. Point number B, basis of preparing financial statement. Point number C, reason why entity is not regarded as what? Going concern. Means there are 3 points. I think you have understood what I have written. But written? Wait for 5 minutes. Written? Now I have written one point. What IND AS 10 require fundamental change in the basis of what? Accounting. Rather than what? Adjustment to financial statement. What AS4 was to say, in this case AS4 says only adjustment to financial statement. But here IND AS 10 says fundamental change in the basis of accounting, means now all assets and liabilities will be recorded at what value? Will be recorded at realizable value. Means I am not saying cost price or realizable value, whichever is lower. It is at a realizable value, even though it is more than what? Cost price. Are you getting what I am saying? A realizable value. The fundamental change in the basis of accounting is the keyword. Okay? We'll discuss once again this point tomorrow. Thank you very much. We'll meet tomorrow. Okay?